Welcome to The Explainer. Today, we're diving into the story behind a massive shift in India's economy. We're talking about the rise of a whole new generation of investors who are basically rewriting the rules of the stock market.
And this number right here, 11 crore, this is the main character of our story. It's not just some statistic, it's proof of a revolution. This is how many individual investors are now active on India's national stock exchange. That figure alone tells you just how dramatically the financial world has been reshaped.
And, this quote from Nitin Kamath, the guy who founded India's biggest stockbroker, just hits the nail right on the head. The stock market isn't some exclusive club for the super rich anymore. It's totally mainstream now, especially since the pandemic. It's become a normal topic of conversation at dinner tables all across the country.
So, what was the spark? What really lit the fuse on this crazy explosive growth? Let's break down how the market got to this point so quickly.
Okay, this timeline is where the story gets absolutely wild. Just look at that acceleration. What took 8 long years to do before 2020 was done in just 3 years after. The pandemic was this massive catalyst, kicking off a kind of gold rush of new people jumping into the capital markets.
Now, when you have millions of new investors flooding into the market, they're hungry for information, right? So where do they turn? Well, they turn to a whole new breed of financial guide, the financial influencer.
So let's be super clear about who we're talking about here. A finfluencer isn't just your typical financial advisor. These are content creators. They're using platforms like YouTube, Instagram, and X to chop up really complex financial stuff into small, easy-to-understand bits for a huge online audience.
And this is where it gets tricky, because this whole finfluencer thing is a total double-edged sword. On one hand, they've been amazing for democratizing finance, bringing financial knowledge to everybody. But on the other hand, it's kind of the Wild West out there. It's an unregulated space full of risks, from sketchy paid promotions to potential for market manipulation.
So this creates a huge problem for regulators, doesn't it? How on earth do you protect all these new investors from getting burned without accidentally killing the very educational content that got them interested in the first place?
For a regulator like the Securities and Exchange Board of India, or SEBI, finding that perfect balance was the challenge. The goal was pretty clear. Protect investors from the bad guys, but keep the good, positive, educational energy that was coming out of this new online world.
And this is what SEBI came up with, and it's pretty brilliant. Instead of trying to play whack-a-mole and go after every single creator, they went after the business model. They banned regulated companies from paying unregistered finfluencers. Boom! That turns off the money tap for the sketchiest players while still leaving the door wide open for real, unbiased education.
Now, this new army of domestic investors, they weren't just watching videos, they started moving markets. Let's take a look at the data to see how their participation has totally re-engineered the Indian stock market from the ground up.
This chart shows a historic shift in power. For decades, it was the big foreign institutional investors, the FIIs, who called all the shots. But look, their influence is now at a 10-year low. And who's taking their place? Domestic institutional investors, or DIIs. They're at an all-time high. And they're powered by a flood of retail money coming from regular people through things like mutual funds and SIPs.
And this chart just hammers that point home. It shows that as foreign money has been pulling out, domestic institutions and individual investors have stepped right up, becoming huge net buyers. This is a total game changer. It makes the Indian market more stable, more self-reliant, and way less dependent on the whims of global finance.
So we're in this totally transformed market with this whole new universe of online advice. What are the key things you, the individual investor, should be taking away from all this?
All right, let's get practical. The experts have a pretty clear set of rules for surviving out there. First, always check who you're listening to. Are they actually registered? Second, if someone is promising you guaranteed high returns, run. There's no such thing. Third, try to figure out if there's a conflict of interest. Is someone being paid to tell you about a product? And finally, and this is the big one, use all this content as a starting point for your own research, not the final word.
In the end, after all the charts and all the advice, it really just boils down to this one powerful idea. Investing is not a spectator sport. You have to step into the arena. Yeah, you're going to make mistakes, but like the quote says, the real credit goes to the people who actually have the courage to get in there and participate. And that really brings us to the ultimate question. The Indian market has been completely transformed. There's more opportunity and more access than ever before. So, you're in the arena. What's your next move?